Good evening, all. Ira Epstein, and I'm starting off with the invite to my webinar that will take place on Thursday. But first, it is Tuesday evening, November 15th, 2022. We're after 6:30 p.m. But as I said, we're going to have our live webinar this coming Thursday. I open it up at 12:15 p.m. and believe me, it is fast-paced. It's only 20 minutes long. I do not make it available, a recording of it on the website. I want you in it. That's the reason. Not interested in you visiting it later. You want to ask questions, you want to be part of it, want to see the fun that we have, you join in. Otherwise, you can hear about it from other people. And we can cover for you just about anything you want, spiders, ETFs, stocks, in the futures market. I ask one thing. I've sent out the invite. We're filling up fast as can be. We have limited seating anyways. But up here, if you didn't get the invite because you're not on my mailing list for some reason, just move your cursor. When you move it up there, you'll see an icon appear. Fill out everything. You'll then receive instantly an email with your user ID, password, and the link to come in. We use Zoom. As you come in and you read the interview, your invite, by the way, if you have questions, want me to cover certain charts on stocks, spiders, or ETFs, write them to me from that. Let me at least give me a chance to set up those charts. The futures have 40 different charts. It's easy for me. It's hard in the spiders and all that because there's thousands of them, and I want to be able to give you the window envelopes and all the studies. Bring your questions. I'll answer them on the fly, but don't expect me to create a lot of charts on the fly. We have 20 minutes. It's a lot of ground to cover. I probably have 15, 20 charts already that I've already built for people writing me. So we fly through them. It'll be a lot of fun. Well, today's an interesting day. You know, we heard late that Poland had 2 missiles strike in a village, I guess, and 2 people were killed. Russia claims they did not aim the missiles. I want to use that word so carefully. Aim the missiles at Poland. I'm sure they did not. But were they their missiles? And if they did, at what point do you control things? 110 to 100 missiles today, depends if you listen to Ukraine or other people's count, were fired at Kyiv and other cities, shutting and taking the cities down for one reason, hurt the population. Well, at what point do errant missiles going over borders get the ire of NATO, and then the threats start coming in about closing down airspace and the like? That can happen at any point. Latvia's already calling for an investigation into that. So we will see. But if you stir the pot up, you can wake up the giants. And if you wake up the giants in a way that's not just military support, but NATO support coming in, you've changed the whole architecture of all that in a monster way. And as powerful as Russia is, so is NATO. And air defense-wise, really NATO. So there's a lot here that's on the table. The other event tonight is President Trump. He's expected to announce his candidacy one more time to the ire of certain Republicans, and I'm sure to his mass, they'll be cheering in the street. Here's what I know. It's going to make for an interesting 2 years, okay? I mean, the names, the mudslinging, all the things that are going to happen, it's going to be wild. Does it implode on the Republican Party? That's going to be the biggest issue. You can't have a lot of people running against the Donald and think that you can win because you start splitting the votes of those people. So you got to get a unified candidate. And then the question is, how do the people vote? But you got a long time between now and then to decide that candidate. The other thing you're looking at is the consumers loading up on massive amounts of debt. Are you looking at credit card balances? They came out today. The consumers going crazy at these prices. Not prices is wrong, at these interest rate levels. And remember, these credit card companies, they're not bashful. It's 10% to 24%. So you load up, how do you pay that off? That becomes a big issue. I was looking at the profile, and generally you're not loading up on the people 60 years and older. It's under that, and you got to just pay attention to where you're at. PPI number today came out soft, which is great. That's the wholesale cost that goes into the goods, which goes and transfers down. But there are negatives. I said it in my financial update. I read today that cab fare in New York, they're going to set the meters now with a 23% increase. That does not include the increases that they want to give on surcharges from the airport. So I'm guessing, I remember paying a couple of years ago, not a decade ago, a couple of years ago, $100 to hop on a plane to New York and back. My wife and I would go. It's not a big deal. Now the airfare is more than the plane flight. Something is not right here. You've got to find a better way from the airport, I guess, into Midtown and other areas, because this is craziness. All right, and that's full of inflation. Remember that. DraftKings, as I said, you filled up the gap here, and will the market stall on that? That's often what happens. You come up and you start running out of air, and you're wondering, can you slip back? The trend is up, but as I said, you filled the gap. The market between here and the 200-day average should have a lot of resistance. In the Bollinger Band, it's not in play right now. You'll say, why not? Well, it's up at a new high for the level. So I think these are the numbers that are going to be the resistance in the market, but it's not overbought. So don't get bearish. That's not what I'm saying. I said I think you're in a resistance zone. You filled the gap, and you can run out of air there and might have to pull back to the 18-day average to figure out what the next step is. But I don't see anything bearish on that chart. When I come to lithium, the market has still got higher lows, higher highs. I think I was right in the analysis that you'd run into trouble on the first challenge of the 200-day average and the 100 and the Bollinger Band. Yes, you popped over it for a few hours, but you're right back to it. That's the point that I'm making. Keep in the back of your mind, nobody's going to pinpoint a top. You get lucky every now and then with your work. That's what it is. It's about zones in the market. That's what you want to narrow in. Now, some people can have a zone this big. They're never out of their zone. They're always right. But when you're a trader, you're looking for these zones and where you take money that you've deployed out of play and put it somewhere else to work. That was probably what's being done there. I'm reading that Apple is moving chip production to Arizona. Now, what kind of chip production? I'm curious about. The Taiwanese plant that's being built will be ready in about 2 years, but everything I've read in the technology, they're not the type of chip that Apple wanted for the next generation of phones. That doesn't mean that they can't do it, but I haven't seen that that's the case. Intel has another plant about the same time coming online, but they haven't been a supplier of Apple products recently. But I like that Mr. Cook is moving around from Europe, other places. Run from China, Mr. Cook. Run from China. Your phones are super expensive anyway, so let's assume they go up another 10%. Run from China. Can't make a better choice for you. There's no bargain there, and you can't count on the supply chain. But you're at a key resistance now, right up here at the 100-day average, pushing into the 200 in the upper band. The market's acted better than I thought that it would. It was a bear market rally that has some legs to it. I give it credit for that. The support's 146.30, but you'd have to risk on that back to 134.58 to get long. I think it's too much to risk on that trade at this time of year. Disney came alive. If you don't take out today's low in the next day or two, the odds favor you're going up to the 18-day average of closes. And that would be a reversal of fortune, as this market, as you can see, got down here at 86.28 and was acting terrible. It's rallied back $8, $9. That's the good news. Maybe the chair will be able to keep his job a while. XLF. All right, the financials. Be careful. There's some divergence. Notice how the red line is starting to turn down. It's still in the 82 level. It's catching some buyers here, but if it gets under 79, you don't want to touch it. That means it can fall back easily into the 200 and maybe the 18-day average. I am not bearish. I would be abandoning long ideas if it does that. XLI still fully embedded. I think these breaks will be bought. Something else happened. The 18-day average just crisscrossed today, the 200. You normally make higher highs off of that. In semiconductors, wasn't this the industry that was falling apart? You do realize it was just here in the mid 130 range, and the market is now 185. If you paid attention to the news articles, you got out wrong. And the market really hasn't let traders in very easy at all. Why? because it keeps riding the Bollinger Band. They're getting over it. You've got 4 days in a row now over the band. You rarely go beyond 5, but it's been one heck of a rally. And when you pull back, we'll see if the 200-day average becomes support. It didn't stop the market on the way up, so I don't know that it'll act as support on the way down. The 100's more likely to do that. In the home builders, they're into key resistance. Now you're at the 200-day average, the upper band. Bye-bye. I'm not saying it can't go higher. The easy money, if you call it that, is out of it. You're overbought. You're at all your targets. So long. Have a good time. XLE in the energy sector, still acting good. You had lost the embedded reading. You made it back down to the Bollinger Band. Now you're up at the resistance level, and you're not embedded. I'll let somebody else want to own it at that point. In the gold market, we had 1, 2, 3, 4, 5 days, and you're rolling over to the right-hand side of the Bollinger Band. But that's strength, not weakness. So as the dollar goes down, gold gets the bid. I've mentioned this to you now since this began, and we recognized it early on. We saw the breakout attempt on it, and I kept pointing it out, and it's happened. Now, I do think the market will have very serious resistance between here and the 200-day average. That's not a reason for me to be bearish. I'm not bearish. I'm still friendly. In SLV, I think that this market, too, is in the bull camp. It got up, made a run to the Bollinger Bands and the 200-day average, and it's still in the battle at that number. Hasn't left it. But because it's embedded until the red line's under 79, I favor the upside of the market. In the copper market, here too, you're in a key resistance at the 200-day average in the upper band, but you're embedded. Until you lose the embedded reading, you back away. Now, I had traders in the futures that I was telling to buy this market today, my paid subscribers. They know what you did with it. I'm smiling. You had a good day. In TLT, as you take a look here, the market came up to the, and it's right at the resistance of the upper band, and it's overbought. There's a point at which you're getting a little bit rich in the falling of interest rates. Probably a good move away, and that's what I think the pros are going to do. They'll take some money off the table in this market. They won't get bearish. That's not what the trade is saying. It's saying it's rich. It's had great CPI for it. It's had great jobs numbers, PPI. I don't know how long everything will stay great, and you've got to be concerned with that. Dollar index, bearish as can be. Look at how it just keeps falling. Could it be going to 28.03? Does it embed? It's oversold right now. Certainly not a short sale down there. The question is, how far down does it leak as the euro keeps coming up? But in the euro, this is not a buy zone. This is a zone in this ETF to walk away because you're at the combination of overbought, not embedded, and the upper Bollinger Band. It's been a nice run. I'd be very cautious with it. So again, I want to just remind you, I hope to see one and all of you at our live What's Up webinar on Thursday. Just click up here, hit the icon, enjoy. It's free. I'll see you then. You take care.